Hey guys, how's it going? Welcome to another video. I just wanted to show you guys the inner workings here of Breakout Sniper, how we look at things. We don't just do random stuff with random stocks. We really try to put it in the right frame for you guys. So you know what sectors are hot, what stocks are hot, where you want to be looking. I think that's very important. So I have a trading view. That's my charting headquarters. But not only that, I just use it to look at a lot of data. And let's just go through a list, some of the lists I've compiled here that I use daily and really help me a lot to look at the markets in the right way. So I got this blue stuff here. The blue label is SPX, S&P 500. Below that, you have the All World Index. You have the small caps, Russell 2000. You have the Nasdaq ETF QQQ. You have China large cap. You have the Nikkei in Japan. You have the Eurostox 50. And then you have some other stuff here. Of course, I follow more on this, but we'll get to that later on. So we have the tick index with stocks are ticking up, ticking, down, ticking on a day. Can give you some nice signals also intraday. You have New York Stock Exchange advanced and declines. So see how, per day how many are advancing and how many are declining. So yesterday were mostly decliners, as you can see from the red bar. And then you see, for instance, this is, as you can see below here, high beta, low beta. So this is the ratio of what the volatile stocks are, how they're doing against the not so volatile stocks. And then, of course, we have the famous VIX index, the volatility index. We want to be looking for breakouts when, mostly when it's volatility is subdued, like here. This is when you're going to get better breakouts, but now like VIX is still in the 20 range. It's harder to get breakouts of follow through when that you can really ride and risk manage properly. So current conditions are not ideal for breakout trading, but I think maybe we'll get there before the year ends. We'll get back to a better suiting environment. So also something to keep an eye on, of course, the VIX index, obviously, very famous. CPC, the put call ratio. Currently, it's nearly at 1. It's a great contrarian indicator. Normally, when it goes above 1, which is pretty much where we're at, it indicates a bottom. It means people are buying just as many puts as they are calls. Um, yeah, and it's a great contrarian indicator, and we're nearly there. So also something to keep an eye on, the CPC put call ratio for contrarian signals. NCFD, Nasdaq stocks above 5-day average. Also, you can use it for contrarian indicators. When it's very high, you're probably set for a pullback, or here, and and so on. And of course, here on the downside, the opposite is true. You're probably due for a bounce. um, let's see. New highs, new lows. This Q index, percentage of stocks above the 50-day moving average. And of course, US dollar index, which I use also for gauging liquidity and make some assessments about commodity markets, emerging markets, because the dollar really is one of the biggest variables in macroeconomic investing and trading. So very important. Maybe it's double topping here, who knows. I'm not going to go into that in this video. That's not what this video is about, but it's certainly something to keep an eye on, and I do it on a daily basis. Euro dollar, dollar yen, dollar won. And then this is also an interesting segment here, guys. These are many of the subsectors of the market here in green. Now let's see what we got here. Home builders, not great. Materials, not phenomenal. XME, holding in there, also not great at this very point in time. Energy, doing quite well. Doing quite well. Higher lows. So this is something to keep an eye on. Energy seems to be outperforming. Financials, done quite well until recently, wrote down. Utilities, also on the verge of breaking down here. Consumer, off a cliff here lately. Industrials, been flatlining for quite some time. Tech, heading back up there now that Nvidia has beat earnings. Communications, not phenomenal. Staples, not good. Healthcare, doing very well. So we have energy that's doing well, and healthcare. So those are two ponds, so to speak, that you want to be fishing in, right, guys? We don't just want to do random stuff in any random sector. We want to know which way the wind is blowing. Okay. So now you have an edge probably if you go into the energy and healthcare sector as it currently stands. The 10-year yield, 2-year yield, the Baltic Dry Index, the commodity index, ISM, agriculture, commodities, gold, copper, oil, high yield, tips. A lot of stuff, economic indicators that I use, so I know which way the wind is going to blow, which ponds to fish in, as I already said. So we're not just doing random stuff, and we know what context we got to look at the market in. So that's like the macroeconomic stuff. So of course I have the sectors here. I got them all. Here you have countries. So you have all the countries you can think of pretty much that are significant. Taiwan, South Korea, Japan, India, Indonesia, Vietnam, Malaysia, Thailand, you name it. We got it all in here. So that's something that you can flick through and just see, okay, well, you know, this country seems to be outperforming all the other countries. Maybe we want to look into why that is happening, right? The commodities, energy, tech. So I got it all. I got many ATFs here and things that are of importance that we want to be keeping an eye on for sure. Yeah. So yeah, that also helps visualize a lot of pockets of strength or weaknesses that you can just flick through by using the charts. Also helps a lot. Something I use a lot, the sectors list here that I made. Ratios, of course, very important as well. So I was talking about sectors are outperforming, right here, tech against the S&P 500. So this is the outperformance of tech against the S&P 500 index. Doing well. XLY, not doing so well. XLP also knows not doing so well. Another subsector, XLE, holding in there. Energy is doing somewhat okay. It's been doing well since about a month ago. Financials, not outperforming at this point in time. XLV, this is the healthcare one that I was talking about, outperforming the general indexes. So this is where you want to be fishing, guys. This is where you want to be active. Look for healthcare stocks that are doing well as long as this ratio here is improving, which is as it stands today is the case. XLE, nope, 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 and nope. So these are a lot of indicators here that have made a lot of ratios here. Also something I like to use, the semiconductors against utilities. This is just another gauge of risk on, risk off sentiment. So it seems to be improving here, guys. especially of course after the Nvidia announcement, which is sure to improve sentiment, I guess. And then you have here EEM/SPY. This is the ratio between the emerging markets ETF and the American Standard and Poor's 500 index. And there are a lot more. I'm not going to go through them all here, but there are many, many of these ratios that I use to see what markets are underperforming or outperforming. So I just figured I'd make a video about it, so you know what I'm looking at, how I look at things, and how I come up with these trade ideas. Of course, here I have also a niches list. Here we have gold miners and biotech and cybersecurity and you know all kinds of stuff. Marijuana, lithium, robotics. So you can also just, what I do here guys is I press the down button on my keyboard and I go like this. And these are weak. And then I'm like, damn, look at this. IBB, biotechnology. Everything was, let's go back here. It's down the last couple of weeks, down the last couple of weeks, down the last couple of weeks, down, and then suddenly, damn, look at this. It's up. It's up nicely. So biotech, okay, market for the checklist. We want to be looking at biotech stocks here going forward. As long as this uptrend is intact, and I've breached about 10 and 20 day here. These two lines here, the blue lines that are closest when it comes to riding a strong trend, and they are firmly above it. So let's just ride that trend. Look for biotech stocks here, guys. We don't want to be overcomplicating. We want to be swimming with the tide. Here, pharmaceuticals as well, strong. So a lot of these sectors are rather weak. They're not doing very well. They're not very convincing. They're chopping, and we don't want to be too involved with them. Why should we? Why do you want to swim against the current or with the current? That's what you want to be asking yourself. So I want to be swimming with the current. So we got to look where there's a strong tide, and we want to go along with it and try to make things easier for ourselves instead of harder. Right? That makes total sense, I guess. So I would rather prefer to be active in healthcare and biotech and some other sectors here than, for instance, the marijuana stuff. That's fallen off a cliff. So yeah, that's I just wanted to show you guys how I look at things and make a small video about it here. 13 minutes in now. I think I've covered a lot of ground here, and yeah, I just wanted to show you why I lose a lot of these ratios and macroeconomic indicators as to yeah, to look at the right frame for certain markets. And I want to thank you for tuning in again. Be sure to like and subscribe, share the video, also join the Discord channel. We haven't launched the premium feature yet, but once we do, we'll have a discount coupon code for you that in which the first 50 members will get the first month for $1. So I mean, it's basically free. So we'll be launching that in the new year somewhere. Just it's a new service. It's only just been started, and we look forward to a very fruit-bearing future. And I think these ratios and all this macroeconomic stuff will help ensure that we get there. So thanks again, and talk to you soon. Bye.